Most indicators are lying to you. They repaint, they lag, they drain your account. They're built to make you lose. But this setup isn't like the rest. It's a simple two-indicator strategy that delivers clean, high-probability entries, backed by precise risk control and real data. I've backtested it extensively, and the results speak for themselves. Stick with me until the end, and I'll show you the exact indicators, optimized settings, and the complete step-by-step rules that make this system so effective.
Step 1. Setting up the Bollinger Momentum Deviation Indicator. We'll begin by setting the foundation for this strategy with one of the most dynamic tools available, the Bollinger Momentum Deviation Indicator. This indicator blends volatility, direction, and pressure into one visual system, helping you see where the market is gaining or losing strength before big moves occur. It's ideal for spotting early shifts in momentum that often lead to breakout continuations or clean reversals. Getting started. Open TradingView and load up any chart of your choice. For this tutorial, we'll use Bitcoin, BTC/USD on the 1-hour time frame as our example, since it provides a balanced mix of signal clarity and trade frequency. However, this system is fully adaptable. It performs just as well on Forex, crypto, stocks, or indices across short-term or long-term timeframes. Next, adding the indicator. Let's add the core tool. Click on the Indicators tab at the top of your TradingView chart. In the search bar, type Bollinger Momentum Deviation. Select the version authored by the listed creator and click to add it to your chart. Once added, you'll immediately see a colorful cloud and an oscillator zone appear below or around your price chart. These visuals represent your momentum map, a snapshot of how strong or weak current market movement is in either direction. Configure the settings. Before using the indicator, we'll fine-tune it for maximum clarity and accuracy. This step ensures that you see only what matters, the clean, actionable data, and nothing else. Click on the settings icon next to the indicator's name. Go to the Inputs tab. Adjust the settings exactly as shown in your tutorial or preset. Pause if you're following along live. These inputs slightly smooth the data and make signals more consistent across different timeframes. Next, open the Style tab. Uncheck all unnecessary visuals that add noise or distraction. Keep only the following visible: the main plot line, the cloud, the oscillator zone. Once done, click OK to apply your changes. Your chart should now look much cleaner. Only the essential components remain, allowing you to easily read momentum without clutter. How to read the signals. The interpretation is straightforward but powerful. Blue cloud, plot, or oscillator equals buy pressure, bullish momentum. Red cloud, plot, or oscillator equals sell pressure, bearish momentum. When all three turn blue, it signals that market sentiment and momentum are firmly bullish. Buyers are in control. When they all flip red, it indicates strong bearish conditions, meaning sellers dominate and the trend is likely to continue downward. Think of this as your momentum detector. It shows you who currently has control of the market, buyers or sellers, and whether that control is strengthening or fading. Step 2. Adding the ATR filter, confirmation layer. Now that the Bollinger Momentum Deviation Indicator is set up and ready, it's time to strengthen our system with a confirmation layer, the ATR filter. This step helps us filter out weak or false signals that appear when the market lacks real momentum. The ATR doesn't measure direction, instead it measures volatility, or how much the market is actually moving. By combining it with our momentum indicator, we can confirm whether a potential breakout or reversal has enough strength behind it to justify taking a trade. Think of the ATR as your market readiness gauge. It tells you whether conditions are worth entering or if it's better to stay patient and wait for a stronger setup. Adding the ATR to your chart. Click on the Indicators tab again at the top of your TradingView window. In the search bar, type Average True Range. Select the standard version created by TradingView and add it to your chart. Once added, you'll see a smooth, wave-like line appear below your price chart. This line continuously measures the average volatility of recent candles, giving you a live reading of how active or quiet the market currently is. Adjusting and optimizing the ATR settings. To make sure the ATR aligns perfectly with the Bollinger momentum deviation signals, we'll adjust its sensitivity. This helps filter out weak price movements while still capturing meaningful volatility shifts. Click the Settings icon next to the ATR's name. In the Inputs tab, adjust the parameters exactly as shown in your tutorial or screen overlay. If you're following along live, pause here and enter the values carefully. Small differences can noticeably affect results. Next, move to the Style tab and simplify your visuals if needed. Keep only the main ATR line visible. You can increase its thickness or change the color for better visibility against your chart background. Once everything looks clear and readable, click OK to apply your settings. How this filter works. With the adjustments complete, your tuned ATR now acts as a confirmation layer for every trade setup. Here's the logic behind it. When the ATR value rises, it means volatility is expanding, market momentum is picking up. This confirms that a signal from the Bollinger momentum deviation has the strength to follow through. When the ATR value stays flat or declines, volatility is low, and the market may be entering a consolidation phase, a warning to avoid taking trades until conditions improve. By using the simple filter, we avoid jumping into trades during low-energy markets, where signals often fail or produce choppy results.
Step 3. Combining both indicators, the core strategy. Now the magic happens. With both tools calibrated and active, it's time to merge them into a complete rule-based trading strategy. This combination of Bollinger momentum deviation for direction and strength and ATR filter for volatility confirmation creates a simple yet powerful trading framework that adapts to any market. Sell setup conditions. Let's walk through a real example using Bitcoin on the 1-hour time frame. Condition 1. Momentum shift. The Bollinger momentum deviation turns completely red, meaning the cloud, mainline, and oscillator all show bearish alignment. This confirms that downward pressure is building across multiple volatility layers. Condition 2. ATR trigger. Shortly after the momentum shift, the ATR prints a short signal or shows a clear uptick in volatility, confirming strong downside energy. This ensures we're not selling into a quiet or consolidating market. When both align, enter a sell trade immediately after the current candle closes. Stop loss. Place just above the recent swing high. Take profit. Target a 1 to 1.5 risk-to-reward ratio. For example, if risking $100, aim to make $150. Result: a clean, stress-free trade directly to target, backed by both directional and volatility confirmation. Buy setup conditions. The logic simply reverses for long trades. Condition 1. Momentum confirmation. The Bollinger momentum deviation turns fully blue, with all components, cloud, line, and oscillator, in bullish alignment, signaling upward pressure. Condition 2. ATR confirmation. The ATR prints a long signal or shows an increase in volatility, confirming active market participation and strong buying momentum. When both align, enter a buy trade on the next candle close. Stop loss. Place below the most recent swing low. Take profit. Maintain a 1 to 1.5 risk-to-reward ratio. And that's it. A clean, mechanical trading system using Bollinger momentum deviation plus ATR. No repainting, no guesswork. Just structured signals with visual clarity and smart risk control. Backtest it on your favorite assets, BTC, gold, EUR, USD, or indices, and see how it performs for your style. In trading, precision always beats prediction. The key isn't catching every move, it's catching the right ones with confidence. If you found this breakdown helpful, hit like, subscribe, and turn on notifications for more free data-driven trading tutorials. Thanks for watching, and as always, stay disciplined, stay patient, and trade smart.